And welcome back to Metro Morning Live. It is now 14 minutes past the hour. Temperature in Jackson, 71 degrees. As we do each and every Tuesday, we talk finances with our financial expert, Jim Griffith of Griffith Financial. Good morning there, Jim.
Good morning, Rob. How are you?
Pretty good, pretty good. How was your holiday yesterday, Jim?
It was excellent, Rob. I ate too much barbecue, got some sleep in, so I can't complain.
Well, you needed some rest, Jim, because you're going 24/7.
Oh, you're pretty much right about that.
Yes, sir.
You're pretty right
Well, this
about
morning, Jim, we're going to talk about managing your taxes when investing. And when it comes to managing your taxes, why is that important?
Yeah, it's managing taxes is important because it's critical to a sound life and retirement plan. Not managing your taxes will definitely lower your investment performance over time. There are a number of ways to do this. You can use tax-free investments, tax-deferred investments, as well as what we call harvesting or managing your portfolio. And basically what that entails is if during the course of the year, if you buy a stock and it goes up in value, you have some other stocks that go down in value, you can sell those too, especially if you have the same amount of profit and loss, and that will basically be a wash, so you won't have to pay taxes on that profit, reinvest that money into something else.
And Jim, when you talk about taxes, what type of taxes do we face?
Well, Rob, that's another. That is a really big thing that people don't understand, is that taxes are really the thing that we really need to be most focused on. We got federal taxes, federal income taxes. We got the FICA tax, which basically pays for Social Security and Medicaid. Then we've got if people are gifting to their children, we have to consider the federal gift tax. And then we have estate taxes for those people that have large estates. On the state level, we have, again, income taxes, sales taxes, excise taxes on things like tobacco, alcohol, and other products that people consume. And then on the local level, we've got the property taxes. And property taxes, you got sales taxes, and when you take all of that and put it together, it puts a really large tax burden on the individual. So it makes all the sense in the world to manage your taxes all the way down the line.
Well, you mentioned the FICA taxes. I wondered what that FICA was on your check stub. I wondered what that meant.
Yeah, and they're kind of sneaky about it. They don't. It's in there, and they just snatch it out.
Well, Jim, do people need to understand the tax code to manage their taxes?
No, not really. What they need to do is have a basic understanding of the principles of how taxation affects the amount of money that they get to keep. To give you an example, if you earn 10%, let's say your average is 10% on a stock. Once you pay the taxes on that stock, because if you buy it, it goes up in value, you're going to have to pay either short-term or long-term capital gains tax. So when you pay the tax on that, it could actually lower that average return down to about 8%. Now, after that, you got fees, expenses, transaction costs. When you throw that in, I call those indirect taxes. It could come down to even 4%. So the main thing to keep in mind is that whenever you're doing your investing, make sure that you keep that managing the taxes and everything foremost and in the forefront.
Absolutely. And how often do the tax rules change?
Yeah, that there's a saying in this business, and the difference in death and taxes is that death doesn't change when Congress goes into session. So every time we have an administration, more than likely there's going to be some effort to make some changes in the tax code, as we just went through with the current administration. There's been about 80 changes since, I think it's 1940. The main thing, and every time we have one of these changes, it's going to affect your portfolio in one way or the other one, so you want to keep an eye on those changes. Try to stay current. If you're not familiar with what's going on, definitely seek professional help, and especially this year, because all of the changes that happen with the Tax and Jobs Act under the current administration will go into full force this year. So it's a great time to go out and get an annual review.
Wow. And what type of investments can be used to manage your taxes?
There are a number of things you can do. Number one, you can use tax-exempt investments, and those are things like tax-free municipal bonds, tax-free bond funds. You also have tax-free money market accounts. When it comes to deferred instruments, we have the standard 401k, anything that you're putting money into on a pre-tax basis. There's also annuities, and the most tax-efficient investment under the tax code is life insurance.
Okay. And, boy, that's the worst three-letter word in the English language, tax. But anyway, Jim, what are the key things to keep in mind when investing?
Yeah, basically there are three key principles to keep in mind. And one is that you're going to have the accumulation phase. Then you have the income phase, and then you have the distribution phase. In each one of these phases, you want to make sure to minimize the taxes, because it's not all about accumulation. As the older people used to say, it's not what you make, it's what you get to keep that counts. So during each one of those phases, income, distribution, as well as accumulation, you want to do everything you can to maximize minimize the taxes on it.
Okay. And just how important is it to manage your taxes?
It is extremely important. I tell you what, most people don't really realize where their tax money goes to. So let's take a look at this quick clip and give them an idea of what we're talking about. It's a huge.
Politicians have their own ideals and plans for how America should be run. And it may not sound like they're talking about money when they're campaigning, but the whole Democrat versus Republican thing is really about where American tax dollars should be going. So before you dive in on either side, it might be a good idea to get a handle on how we the people are currently spending our tax dollars. Before we start, there is a quick thing to note. These numbers are from 2013 and do not include Social Security or Medicare. The money for those programs is determined by the Federal Insurance Contributions Act tax and not the annual budget. So politicians can't do much to change the amount of taxes that go to those programs. Here are the programs that the federal budget does touch. Around 8 cents on every dollar goes toward paying interest on our debt. This is another one that's largely non-negotiable, but it's a significant amount and worth mentioning here. 17 cents out of every dollar is spent on government programs like subsidizing and supporting agriculture, commerce, transportation, and governmental administration, or on science and space technology, things like NASA and the National Science Foundation, international affairs, which includes things like the State Department and all non-military foreign aid. Some of the budget goes to responding to natural disasters or to community and regional development, which includes things like waste disposal and urban development. That 17 cents also goes to the environment, including the Parks Department and managing our natural resources and energy development, or to immigration, border control, and the Justice Department. We also have a program for education and jobs training. All of that combined accounts for the 17 cents out of every income tax dollar. And when you think about how many important programs we just mentioned, it really doesn't seem like a lot. So where is the real money going? Around 50% of our budget goes toward keeping our citizens healthy and out of poverty, which is a pretty good place for it to be. Almost 19 cents on every dollar is spent on jobs and family security, things like unemployment insurance, food assistance, housing assistance, federal retirement funds, foster care, and temporary assistance for needy families. Veterans benefits also fall into this portion of the budget. They account for an additional 6 cents on every dollar. And healthcare programs like Medicaid, disease control, and numerous others account for an additional 25 cents. Again, that's half the budget. The well-being of our citizenship is something that most politicians can get behind. Something else most politicians can get behind is national defense, which accounts for almost 1/4 of our national budget. But before you get upset about how we are spending almost as much on the military as we are on medical services, let's talk a little bit about where that defense budget actually goes. Yes, the majority of it is spent on building weapons and conducting military operations, but 5.97% of it goes toward personnel salaries and benefits. That 6 cents is literally how we are supporting our troops. Some of that defense budget is also going towards maintaining our nuclear defense capabilities, and another portion of it is going to defense-related FBI activities. Plus, the U.S. military has almost 16,000 square miles of bases and facilities to maintain. So that 24.79% isn't all going towards bombs and invasions. Some of it is just there to maintain the troops, bases, and equipment we already have. If you found this video informative, please subscribe to the show. Subscribing is the best way to get these videos to you, and make sure that you see all 5 of our videos that we put out each week.
You know, now that he broke it down like that, I really don't feel too bad about the money being taken out like that.
Well, it goes to it's allocated. It's allocated to very good good causes and purposes. The main thing to keep in mind is that most people just focus on federal taxes and state taxes. They don't really pay that much attention to sales taxes, but as you can see, when you really dig down into this thing, once you get your paycheck, the taxation has not discontinued. I'll give you a classic example. Gas prices over the holidays have gone up about 31%.
That's ridiculous.
Well, I consider that to be an indirect tax. So if you got a 1 or 2% pay raise from the Tax and Jobs Act, and gas prices went up 31%, well, there goes your tax cut.
Wow.
You know, so you have to look at taxation from a number of different ways. Also, with people that are high income earners, single individuals earning $100,000 and married couples earning up to $200,000 or more, they still have those Obamacare taxes that are in place. Contrary to popular belief, Obamacare is still alive and well, and the taxes that were levied during that time for that program are still in place. So the main thing to keep in mind here is, number one, do everything you can to tax manage your portfolio when it comes to the accumulation phase, the income phase, and especially the distribution phase, because once you die, you want to make sure that you transfer that wealth that you have 100% tax-free, if at all possible.
Wow, great information as always, Jim. You tell everybody how they can find you, sir.
You can get in contact with us at 800-361-6542. We also have a Facebook page, which is Griffith Financial Services, LLC. Log on and like our page and just send us an email on any issue that you're concerned with, whether that may be accumulation, investing for tax-free purposes, whatever. And we also have our website, which is griffithfinancialservices.com.
All right, thank you, Jim. And you had a great week this week, Jim.
I do. It's going to be a short week, Rob, so, you know, these are
yes,
these are busy.
Absolutely, absolutely. Thank you so much, Jim. All right, still ahead on the show, Dana Holly of Bougie Life will be joining us. You stay with us. We're back in a moment.
You're watching JSU TV.